So let's dive into all things Disney with CNBC contributor James Stewart, along with UBS media and telecom analyst John Hodulik, who just raised his Disney price target by $20 this morning. Jim, let's start things off with you. Since you wrote the book on Disney Wars, you know so well how this company works. What do you predict will happen on Wednesday when we get the results of this vote? And how do you think this whole proxy battle will shape how Disney changes in the coming years?
Well, those are great questions. And of course, I don't have a crystal ball. I don't know how it's going to turn out. I mean, there's a tremendous amount of suspense about this. I will say I would have said a few weeks ago that I thought there was little doubt that Disney would win. It's tough to win a proxy contest. The big, companies like Vanguard and Fidelity, they're very reluctant to embrace shareholder challenges to existing management. But Peltz has recently picked up a lot of support from some of the advisory services, and there is this looming issue of succession hanging over the company. And would Peltz really be in a position to add value to that very important process that's going on? So there are a lot of balls in the air. It's been a very nasty fight, a lot of character assassinations going on, all kinds of claims being made. But I think it's go down to the finish line. I think it's also worth remembering that even if Peltz doesn't win, but gets a substantial shareholder vote, I don't think the board can ignore that. He has said he's not going away. Even if he does lose, he'll remain a major shareholder. If he gets a lot of support, the board will have to listen to him. And remember, years ago, Eisner was the CEO. Disney won a shareholder challenge, but there was so much opposition that he ended up having to leave.
Yeah, such a fascinating history to this company, and we're right now showing the board of directors that is up for re-election. John, you have this fascinating note here outlining all the different reasons why you're optimistic and bullish on Disney stock. You're raising your EPS estimates and also upping your price target by $20 to $140. How much do you see this Peltz proxy battle as a distraction and potentially limiting Iger's ability to accomplish some of the things he's put in motion over the past year?
Yeah, I think it is a concern. I would say, as of now, I think it's a distraction. It's taking a lot of management time, but I would say that the early signs of a turnaround orchestrated by Bob Iger's return are in motion. I think we're seeing the signs, and then I think we captured a lot of that improvement in our new model in our report today. But I think there's risk to that. I mean, if Peltz wins, if there's a change in the board, I do think there's a risk that Bob could leave the firm and really jeopardize a lot of the gains we've recently seen in the company.
Yeah, I want you to specifically dive in here to your outlook on direct-to-consumer and where you see that business going, John, because that's a key part of your bullish note here, and the fact that you see those D2C margins increasing. This is something that's also important to Nelson Peltz. But what's your outlook for the streaming business, especially today as we start to see the integration of Hulu and Disney+?
Yeah, and I think that's a key issue, Julia. We're the cusp of seeing Disney Plus and Hulu put together as one service, probably by the end of the year. We do think there's a substantial amount of synergies in putting those businesses together. And we think it's good for growth. And I think, you really need to compare the operations of that business to where Netflix is. Last year, Disney Plus, despite over $20 billion in revenues at the D2C segment, lost over $2 billion. If we could get anywhere close to the Netflix margins of over 20%, this could be a substantial earnings generator for the company, and we think the company's on the pathway to prove that out.